Hey, very good evening, everyone. Charles here, FRGNT Daily Chart Analysis. Fun FRGNT Coupon Friday, as I like to call it. It wasn't really a fun Coupon Friday, I must admit. I did take one position, but to be honest, the trading day was really just spent, I wouldn't say umming and ahhing, but it was just really waiting for the confluences to align and what setup would have been best. As I always like to reflect back to, I'm not sure if you do view the videos that I do post. If you do, you would know that I posted a US dollar CAD potential long position today. With that said, of course, that's not the only position that I was looking at, but I did like that position, I must say. Despite it being against my higher time frame bias. If you look to the top right hand chart, that's the weekly time frame, where ordinarily with that weekly order block very large you see just there, I am short bias with price coming out of it. That's just the way I trade. With a weekly order block, I have every expectation that price will move short from that. With that said, refined area, we have that daily time frame where price also refined within that weekly order block. Price on the daily time frame, if the internet is going to load here, which it has. I won't zoom in for you to see, you just have to take my word, but that is a daily order block. We're fine within this weekly order block. You can see just here in white where price is respecting and of course rejecting to the downside. So of course also supporting that short bias. Excuse me. With that said, also with the 4-hour time frame, here's the conflict, or here's the supporting evidence in both scenarios. So we can understand with short bias higher time frame, but on the higher time frames, particularly the daily and onto the 4, we can see that price has now broken structure to the downside. Supporting that break of structure, we have a break of the 4-hour 50 MA. And I invite you to look at the performance of that 4-hour 50 MA just to give yourself some bias. Now, price was above the 4-hour 50 MA, and of course, we were in the downtrend. So then we broke below that 4-hour 50 MA, price then retested it, and we started moving to the downside. With that then said, we've created a trading range back down from the low that's now been created here on the 4-hour time frame, back up to the 4-hour 50 MA. With that said, that is now inviting me to potentially look for a reversal position back up to that 4-hour 50 MA. Then if I revert back to the higher time frame by way of the daily time frame, now have a look at the performance of the daily 50 MA. Price to the left hand side was respecting it once it broke above, and it continued to trend above it. Now with price now returning back to that daily 50 MA, my trading strategy suggests that price is going to look to reject that for the day. Yesterday's daily candle, in fact, two prior daily candles, we'll say, retested that daily 50 MA to perfection. We failed to close below. Yesterday's did the business, even giving me more of an incentive to look for a long position. Look how that candle closed. Bullish with a wick, well, it didn't close bullish, but the wick to the low, telling me that there are sellers in that area, potentially those that also trade with EMAs as a confluence. So of course, when price then returns back down to that daily 50 MA, I'm looking for a rejection from it towards the upside. With that said, then we'll take a look at the price action and structure on that 4-hour time frame. A lower low has been created. Now, after a lower low in the most basic format of price action, what are we expecting? We are expecting a lower high for a lower low continuation. That would make sense based on the fact that the higher time frame I am short bias. So I already recognize that it is a riskier type of position. Price is most certainly against my long position, but I'm trying to build the bias to actually take a long position. Now, the caveat to actually not taking the position is because, but for that daily 50 MA, I probably wouldn't be looking in this area for a long position towards the upside. I'm trying to build the story based on the facts that we have. So we've got the daily 50 MA. I'm now looking to the left to understand, well, is there a reason for price to want to reject that area? I'm not just trading 50 EMAs. I'm using the EMAs as a confluence to build my position, i.e., by the time price gets up to here, let's say that was the lower low, lower high area. As you'll see, there isn't a 4-hour 50 MA up at this region on the 4-hour time frame to actually support the short. However, if a bullish candle, a large bullish candle was printing up, let's say now, my confluence would be, well, the last or the most recent 4-hour candle closed bearish below that 4-hour 50 MA. So I would now in fact be using the 4-hour 50 MA currently as a confluence for a short, with the expectation that once price gets into this area, I will have 4 trading hours before this current 4-hour candle closes to expect actually a rejection of that 4-hour 50 MA. Potentially that would be me entering on the wick, and we would have a rejection of the 4-hour 50 MA. I then look at price history in regards to the performance of that 4-hour 50 MA to try and support my thought process. So that's just an explanation on the EMA. So now, as I've said, I'm trying to build a reason to look for a long position from this area. I've got the daily 50 MA. I'm looking left and I'm viewing a bullish engulfing candle that has left behind a daily order block. But with that said, you can see by my illustration that this is very lineal. There are no real clear higher highs and higher lows within this daily time frame for me to really say, right, this is an area in the market where I should be expecting a rejection from. That's complete fabrication. What I would be more inclined to suggest is down at this low, as a result of price on the weekly time frame, top right hand chart now, what makes better sense, if I can say that, is we've had a high, a higher low, followed by a higher high, breaking most recent highs to the left. Therefore, this weekly order block has a reason to be there because that's where the move began. I can't, however, say the same about this daily order block because that definitely is not where the move began. If I zoom out, you can see this very linear daily time frame where, again, it's complete fabrication to come up with a bias just as standalone that an order block should be there. However, the fact that the daily 50 MA has now come up, it's given me reason to look in that area. Now, if I now go to the 4-hour time frame, the same applies. There is no reason to have a 4-hour order block here. What I'm doing is simply refining down my area from the daily time frame, and that's what I've done. I'm now having a look at price action to really see if it makes sense. It doesn't make sense in terms of, well, here is a higher high for a higher low continuation, but what it does make sense of, that we are now in after a low, lower high, followed by a lower low, lower high, lower low potential, lower high to be created. So that was really the higher time frame bias to support me looking long. With that said, of course, the DXY also had to be taken into consideration, whether or not the DXY looked to be going long when price was here on the 15-minute time frame. So I'm refining now down this daily, refining down the 4-hour time frame to have a look at what price action is doing on the 15-minute time frame, since that's my entry time frame. Now what you can see here is price action on that time frame. So we had a very clear lower high in the market confirmed as a result of this lower low. We've then had a lower high created as a result of this lower low. We've then had a push above the most recent structure, in my opinion, and breaking structures towards the upside on that 15-minute time frame, and that's now given me the incentive to look for a pullback into the order block that caused that break of structure before then looking for the confirmation to go long. With that said, I'm always double checking myself to understand whether or not my position makes sense, particularly when I'm looking to take a reversal type of position. Now, what I can see and certainly say is that price action of late, if I zoom in to this, what I've defined as potentially a range, now that was where my hesitation stemmed from, because if I'm looking to trade a range, I'm happy to trade it before, well, in general, I don't mind trading ranges, but my criteria changes ever so slightly when I am to take a range, because I understand how a range can be manipulated to the highs and to the lows. So ordinarily, if I'm looking to take a range position, the best type of format that I would use is wait for a bearish or a bullish 4-hour candle coming out of that area. In this instance, I believe the better play would be to wait for a bullish candle to close out of that range. And once we've had that, of course, we then have a break of most immediate 4-hour structure. Then I'm looking for the pullback, and then I'm looking for the reversal back up to the highs, probably back up towards the 4-hour 50 MA and then beyond. So that was my thought process. Now, as a result of that, looking at EU at the same time, I was looking at taking an EU long. You can already understand why I was hesitant. It's impossible for EU and US dollar CAD both to move long. We're using the DXY as a confluence. If EU moves long, then of course we're looking at DXY weakness. Of course, then US dollar CAD is going to move towards the downside. So there also lies the conflict, why I was very hesitant to look for a long position on US dollar CAD, regardless of it actually making sense. And that brings me on to a quick side point that I stress probably every video that I create. It's very important for you as a trader that just because price comes into your point of interest, it does not give you the green light to trade. It really doesn't. It gives you the green light to really focus in on what you're doing. And that's what I'd suggest to everyone moving forward. Once price gets your point of interest, it's then for you to gather all of your technical ability, put it all in a pot, and make a correct decision, probably like I've done today. So I gave US dollar CAD a miss based on the fact that, well, EU just looked nicer in terms of using the DXY as a confluence. The DXY was looking weak from a particular area on the chart, which I'll show you just now. If it decides to load, and all my drawings are still there. Cool. So the DXY, we had a couple of areas in the chart where I was looking for a reaction from. More so, have a look at the 4-hour 50 EMA, have a look at the 4-hour order block that's been created, and also have a look at what we're doing on the daily time frame. As a result, on the weekly even, we have had a high created. Now, after a high, if I draw that top right-hand chart, after a high, what are we expecting? We're expecting a higher low. Therefore, on the DXY, I would be expecting DXY to move to the downside. How do I have that as supporting to help me come to that conclusion? Well, look at the performance on the bottom right-hand chart. That's the daily time frame. And look at the EMA. Price had room towards the downside to retest that EMA before. We've now created that higher low for the higher high continuation based on the weekly time frame. So it all starts to make sense. There's also an order block up at those highs which price is respecting towards the downside, with failures on the daily time frame to close above that area. When we refine the area down now on the DXY, have a look how price is stepping down beautifully on the 4-hour time frame. We had a high created in the market. This could well be the higher low for the higher high continuation. We had a break below the area. It's difficult to say, I understand, because again, we have that linear price action towards the left, where it's very difficult to depict higher highs and higher lows, and it's very difficult to understand in the immediacy where the break of structure has taken place. However, once price starts to step down, it's down to us to make that decision as a trader to understand, well, price is moving down at some point. That surely is break of structure towards the left-hand side, despite not actually being able to view it. Now, when you have that kind of conflict, what I would suggest doing is putting an order block in the market that may not make sense ordinarily, but try to make it make sense, i.e. I've put a 4-hour order block just where that daily 50 MA is, because I understand what could happen when price gets that daily 50 MA. So I'm not going to blindsidedly believe that the DXY in creating that higher high, higher low type of formation is now going to fall out of the sky. I know at some point it's going to hold and start pushing towards the upside. Now, back to the 4-hour time frame. As I've said, price starts to step down. We've had a low created, lower high, followed by a lower low. We've then had price pull all the way back up, which then, as you can see by my grey box here, I define that potentially as a bit of a range. That was quickly ended by the fact we had a low created out of the range, and that low that was created left us with 2 order blocks to actually select in terms of price then respecting towards the downside. Then in addition to that, the 4-hour 50 MA started to come into play, and price rejected it toward the downside. Prices then come back into those areas. So that's the 4-hour time frame, very clearly bullish. Definitely not clearly bullish, but very clearly bearish. And we have that supporting evidence by way of the 15-minute time frame. If I zoom out, you can see how price was stepping down, creating new lows in the market. Therefore, I'm looking to refine the 4-hour order blocks down and then seek to understand, if I was going to trade a position short on the DXY, where would it be? Now, I can quite clearly see on the 15-minute time frame, linear move to the downside. We had a low created. It's down to us then to understand where that break of structure come from once we've refined that 4-hour order block down. We've got the 15-minute just here at the lows and one right up at the high. So therefore I've got two areas in the market on the DXY where I'm expecting a reaction short from. Therefore, when I'm looking at price action now, my inclination to understand, if I go back to DXY just quickly, if it will load. So when price is here, am I to expect that US dollar CAD is going to move towards the upside? If it does, how much legs or how high could potentially US dollar CAD move based on my refined analysis of the DXY? In my opinion, we could either react from this 15-minute order block, which is supported short, in fact, by the 4-hour 50 MA and also 4-hour time frame and 4-hour structure is what I'm trying to say. Or could the US dollar CAD move higher, which would bring DXY into this area, simply to be followed by a short anyway? So that's my mindset that, well, if I'm going to take US dollar CAD, how long or short-lived could that position be? Now, based on my analysis on the DXY, it could either be very short-lived in both scenarios, i.e. price moving up from this area to the 15-minute order block. That would be US dollar CAD moving in towards some profits perhaps, and certainly if if DXY continued to move towards the highs, then of course that would be US dollar CAD moving into some more profits. But after that, I'm expecting it to move towards the downside. So then with that said, over to EU, you can clearly understand why now, when the EU started to come back down to the 15-minute order block refined within the 4, where 4-hour time frame is also stepping up. Look at price action doing exactly the inverse to what DXY is doing, in sync, I must say. 4-hour refined area respecting the 4-hour 50 MA to the highs, and then of course DXY 4-hour order block 4-hour 50 MA price respecting to the lows. So I hope that makes sense. So what I did do, if I bring up the 1-minute time frame for you all to have a good look at that, and then I'll quickly end the video, is I was looking at taking a long position on EU, which I did take eventually after waiting for price to do its thing. And here you can see my analysis. So price came down, I was looking for price to break structures. You can see the key structure point in the market that was created as a result of making that low. So it's the same old. I put my illustrations to the chart and I say, okay, I'm waiting for price to break up. I can have an aggressive break of structure, which would be here. And if price did come back down, I would have taken that immediately. I would have had no hesitation to do that whatsoever, based on the fact that DXY was also rejecting that 15-minute order block refined within the 4. Unfortunately, price didn't tap in and I was forced to wait. But for being forced to wait only delivered me with my best type of scenario, where we clearly broke the most recent lower high in the market towards the upside, giving me all the confidence to take that position. I must say I did one better. When price came back into the area, what I did was try to understand, can I get another turnaround on that 1-minute time frame? Just give me that cherry on top of the cake. So I had, again, a structure point in the market, and then when price broke up towards those highs, I honestly just I reused the order block just here, which I didn't have to put it back on the chart. It was still there. So there was an order block that was left behind. Price came in, respected it, and when price got to this stage here and gave me a 1-minute candle in the upward direction, just here, that's when I execute that long position, so slightly higher. Around about 5 to 6 pips, I believe it was there. 4. So 5 pips stop loss that was. And I respected the 15-minute order block, and I also respected the 1-minute order block that I was using. Immediately into some profits, immediately into some drawdown, and then when price made the move again towards the upside, I moved towards break even. Simple as that, as price started to retest that 4-hour 50 MA. So that's pretty much all was written today. So a lot of juggling between US dollar CAD, a lot of juggling between Euro US dollar, and as you can see, price did its thing quite nicely with another half decent return, I'd say, for the end of the week. So it's been a very successful week, to be honest. Very active in the charts despite being on holiday, but that's pretty much the dream coming to fruition. So all the very best, everyone. You shall hear from me again shortly, and until then, do take care. Ciao.